But junk investors were very loyal this year to junk bonds, and we saw year to date a nearly 10% return on triple Cs. Is there a big sell-off coming?
Well, we certainly had a little bit of a retracement in November, but I think we quickly erased that. We were down mid-month about 1.5%. By the time the month ended, it was only down about 25 basis points. You're right, high yield in general has been a good place to be. So if you look at the Barclays, or the Bloomberg Barclays U.S. High Yield Corporate Index, it's up at about 7.25% this year. So it's done very nicely.
Did it depend on where you were, and have your thoughts changed about what sectors might be coming under, pressure, more distress? Retail, energy, they didn't exactly perform the way we might have been anticipating.
Well, it certainly wasn't a straight line year. We had a lot of headwinds across during the year. Energy's actually done fairly well. Metals and mining, which had been one of those sectors that was beaten up several years ago, also did very well. But if we look, retail has had its ups and downs, a little bit more up recently. And then telecom has still been a big question, which is one of the largest sectors of the high yield market.
We'll get to Europe and emerging markets in a moment, but I do want to ask you about the implications of this tax bill should it come out of committee and conference committee in the next few days and get signed. Will there be implications on, obviously, the corporate high yield market, given that corporation tax might come down substantially? Well,
I think the reduction in corporate taxes, I think, is more likely to benefit larger companies than most high yield companies, but there'll be some benefit. Interestingly enough, the deductibility of interest is going to be a bigger question, and that's not finalized yet. There's a lot of work to be done. The last several years, though, the amount of leverage that high yield companies have been able to employ, particularly for LBOs, has been limited by the Fed because they've prevented banks from lending too much. Now, the lack of deductibility, or the potential reduced amount of deductibility for interest expense, is likely to provide the same governor on the system, which will mean that high yield companies will not be able to be leveraged up to the same degree they were, for example, in 05 or 06 or 07, which arguably helped lead to a recession.